Washington just lost control of the Middle East. The Oval Office is caught in an insider trading scandal, and oil just broke $100. I map out institutional money flows and geopolitical catalysts so you don't become exit liquidity. Today, we're breaking down the most chaotic week in the US and Iran war. Exactly how this escalating naval conflict is about to fracture the US stock market. Wall Street has been feeding you a lie all week. They told you peace talks in Pakistan were imminent. They told you Strait of Hormuz was reopening. They drove the S&P 500 to all-time highs on pure, unadulterated opium. But if you look at the physical energy markets, the truth is terrifying. We just witnessed the most aggressive escalation of maritime warfare in decades. U.S. Navy destroyers are firing on cargo ships. Iran is hijacking container vessels. And a $400,000 prediction market scandal just exposed the dark money flowing right out of the Pentagon. The week started with brutal reality check. On Sunday night, the U.S. Navy intercepted the Iran flag cargo ship while it was trying to run the blockade. When it refused to stop, the guided missile destroyer didn't just fire a warning shot, they fired directly into the ship's propulsion system. Marines fast roped onto the deck and seized it. The immediate market reaction? Brent crude violently spiked 6% to $96 a barrel. And that was just the beginning of the week. Traffic in the Strait of Hormuz instantly flatlined. On Monday, only 3 commercial ships dared to cross. The 10-day Lebanon ceasefire meant absolutely nothing to global shipping syndicates. Insurance premiums for the Persian Gulf effectively do not even exist right now. Then on Tuesday, Trump tried to play the peacemaker. He announced an extension of the ceasefire, claiming Pakistan requested it. The White House tried to spin this as a massive diplomatic win, but the market didn't buy it. Why? Because the U.S. naval blockade was ordered to remain in full force. You cannot have a ceasefire while actively choking off a nation's ports. Iran knew this, and the retaliation was immediate. Within hours of Trump's extending the truce, the Islamic Revolutionary Guards struck back. They deployed their Mosquito fleet, heavily armed speedboats, and ambushed 2 massive cargo vessels. They fired on a commercial bridge without a single radio warning. They boarded the ships and dragged them towards the Iranian coast. Iran's military publicly drew a line in the sand, an eye for eye. A tanker for a tanker. This is getting insane. But this is where the geopolitical math breaks down. The White House press secretary initially tried to downplay the hijackings. She wrote on Fox News and claimed it wasn't a violation of the ceasefire because they weren't American ships. But by Thursday morning, Trump snapped. He bypassed his own press office and issued a direct, lethal command on Truth Social. Shoot and kill any boat laying mines in the strait. He announced the U.S. minesweepers are active right now. The Pentagon immediately released footage of Navy SEALs boarding a second sanctioned Iranian oil tanker in the Indian Ocean. This is not negotiation no more. This is global maritime siege. The U.S. has turned back over 30 ships. Iran is actively hunting commercial vessels, and oil officially crossed the $100 threshold. Retail investors are watching the S&P 500, but they are ignoring the industry collapse happening in real time. Look at Europe. Lufthansa just canceled 20,000 flights over the next 6 months. Why? Because the Strait of Hormuz supplies 41% of Europeans' jet fuel, and that supply is almost gone. Global jet fuel prices are up over 70% since the war began. The International Energy Agency is warning that Europe is 6 weeks away from a total jet fuel crunch. Nobody will be able to fly. This is exactly how secondary inflation destroys the stock market rally. When jet fuel costs double, freight costs double. When freight costs double, manufacturing input costs skyrocket. The Federal Reserve cannot cut interest rates when a geopolitical chokehold is artificially constraining 13 million barrels of daily oil supply. This isn't just an energy play anymore. This is an incoming earnings recession for any company that relies on physical logistics. While you are worried about your 401k, DC insiders are treating this war like a casino. On Thursday, a Department of Justice indicted a U.S. Army Special Forces soldier. He used highly classified military intel to front-run the prediction markets, netting $400,000 betting on the geopolitical outcomes. Trump immediately condemned the prediction markets from the Oval Office, and he said that he hates them. He warned government staff not to wager on them, but follow the money. But Donald Trump Jr. is a paid advisor for Kalshi. His venture capital firm directly invests into Polymarket, and Trump Media, the company behind Truth Social, is literally building their own prediction market app called Truth Predict right now. Wall Street is warning you about the dangers of a casino while president's family is actively funds the house for those casinos. This proves one massive reality for retail investors. The game is rigged, and the people making the geopolitical decisions are inherently tied to the platforms profiting off the volatility. I wanted to now take some time out and show you guys how the stock market is truly moving in these times. So this is the monthly for the stock market heat map. With that being said, we have a lot of stocks up this month alone. We have Nvidia spiking, Apple spiking, and the crazy thing is that S&P 500 broke past $700 and we're staying above that. This is insane for what we're really going through. If you look at oil prices and stuff like that, oil prices is still pretty high. And you guys could probably see now that gasoline has gotten up $3.40 per gallon. Some places $5, $6, $7, $8 a gallon. And this can spike inflation. And speaking of inflation, that can really kind of set back next time we can get some rate cuts, and that really spikes up the market as well. And honestly, the biggest number that we can probably see is within a year till we get another rate cut. So that is kind of insane. And people are also talking about them spiking up rates too, and that can be bad for the stock market overall. If they spike up rates, savings accounts are looking a little bit more juicy to save money in just a average savings account rather than the stock market. But if you drop rates, people are going to be putting more money into the stock market. People can get loans. Companies are going to do better. And if we look at the fear and greed index, we are currently at a 66 in greed. So that is also another insane thing to really look at, because a few weeks ago, we were actually in extreme fear, and now we're in greed. That means people are buying up stocks heavily. Look at this divergence. The S&P 500 pushed to record highs on Wednesday, while oil marked towards $100. This is a textbook blow off top. The algos are blindly buying the ceasefire headlines without pricing in the physical reality of a disabled shipping lane. Look at what Ukraine just did. President Zelensky just signed agreements to supply drone interception technology to Saudi Arabia, Qatar, and the UAE. The Gulf nations realize the U.S. cannot protect their infrastructure from Iranian shaded drones. The entire Middle East is militarizing their airspace outside of the military defense umbrella. Defense tech is no longer just a U.S. monopoly, it's a global scramble for survival. Shipping rates are the ultimate leading indicator. With 34 security incidents in the Persian Gulf since March 1st, commercial shipping companies are forcing vessels around the Cape of Good Hope. This adds weeks to delivery times and millions in fuel cost. The market hasn't priced this into Q2 retail earnings yet. When the guidance cuts come, they will be brutal. Institutional money is not buying peace talks. Look at the options flow. We are seeing massive accumulation of the out-of-money call options on energy ETFs expiring in June. The smart money is betting that JD Vance's delayed trip to Pakistan fails entirely, and the Strait of Hormuz remains locked down through summer. And keep in mind, they're estimating 2030 for the economy to return back to normal. The brutal realization: Wall Street is keeping the market propped up just long enough for the institutional liquidity to exit safely. They are selling you the ceasefire narrative, while at the same time hoarding physical energy and defense assets. If you hold a standard tech-heavy portfolio right now, you're walking into a macroeconomic buzzsaw. You must pivot. You must hedge. I built a complete step-by-step breakdown of the exact 3 energy and defense tickers I am accumulating to survive this $100 oil shock. Click the video on your screen right now to see exactly the entry points before Monday's opening bell.